Hello and welcome to the Weekend Investing Daily Bite of 3rd of January, and a day which was surprising to most folks after yesterday's relentless climb of more than 400 points. Nifty just collapsed a couple of hundred points today. The last few slots are left now in the MI Evergreen campaign. First 100 is the code. In case you're interested, please join. I think we'll close it by midnight tonight. Are stockbroking firms going to feel the heat? Is going to be the discussion for the day. Please read the disclaimer and subscribe to the channel if you haven't so far. Nifty, where is it headed? Is a tough call. Yesterday was a fantastic day where the entire range of the last 8-9 days was cleared. This gap you can see here was closed, and today almost half of the gains was given up, 0.76% down. I would still be optimistic going forward until yesterday's low is taken out. Uh, but today was definitely not expected. I was expecting more of a consolidation near yesterday's close, and today's fall was not expected. Nifty next 50 much better than Nifty, closing in positive territory. It gapped up, went higher, but closed at 0.13% versus the previous close. Mid caps slightly down 0.25%, not much, but good gain in the last 4 sessions. Small caps also down 0.19%. Again, I would say no big loss here. So the major damage or some damage has been there only on the Nifty stocks. And of course, the Bank Nifty is a complete collapse of what we gained yesterday. So yesterday's gain has been completely wiped out. Minus 1.2% is where Bank Nifty stands. So Bank Nifty is giving the worst sort of chartical pattern out of all the indices. In terms of the momentum trends, you had 279 declines to 213 advances in the top 500 stocks, which is not so bad. I would still say it is nearly even. Heat map quite red. HDFC Bank thrashed at minus 2.5%, ICICI Bank down 2%, SBI down 1%, TCS, Infosys, Wipro, all of which were running yesterday, also smashed down. ITC down 1.5%. I think today was the last day for getting the ITC Hotels demerger stock, and I'm surprised that ITC was hammered today also. Other FMCG did well today. So Hindustan Levers was up 1.5%, Nestle was up 1.5%. Tata Motors continued the rally from yesterday, 3.3%. ONGC was a surprise winner at plus 5.2%. Pharma stocks have been losing, so Sun Pharma, Cipla, Dr. Reddy's all down. Adani Ports down. Titan gained 1.8%. That was the sort of the rundown from the Nifty 50 stocks. Nifty next 50 was not so bad, but Zomato was smashed down minus 4%. I think this 10-minute ambulance thing has uh, you know unnerved some investors. Things that probably will not be remunerative, but will get done. Indigo down 1.5%, Divi's Lab 1.5% down, Siemens ABB also down, Bajaj Holding down. But some stocks that had been sort of on the sidelines, like REC, PFC, IRFC, those were gaining today. DMart came out with its numbers and it surprised the market. 11.4% on DMart, Naukri up 1.65%, Vedanta also up 1.9%. Overall, a nice mix bag on Nifty next 50 stocks. In terms of sectoral trends, 1.4% down on IT stocks, 1.2% down on pharma stocks. So these two sectors were thrashed, and you had some gains in public sector enterprise stocks, energy stocks, commodity stocks, and PSU banks. Not much, but some gains there. Auto was completely flat after a couple of days of running. So in the last 1 week, you have autos which are leading at 3.9%, and you also have decent performance in consumption stocks, FMCG, and public sector enterprise and energy stocks in the last 1 week. We are now maybe 3 weeks or plus away from the budget, and some moves will happen on expectation of tax cuts and more consumption stocks with disposable income being there in hands of uh, people after that supposed tax cuts. So I think the market will build from here. And another sort of big elephant in the room is what Trump will say on the first day of office or in first week in the office. I think the dollar index at 109 is glaringly very, very, very much overbought. So if dollar index starts to peaks on inauguration day or on January 20th and comes down, I think that will be very good for Indian market in general and emerging markets as well. Um, so far, I don't think there's much need to worry as such. I think the markets are doing all right. ONGC, oil, REC, power finance, all these public sector entities are beginning to run up. PSC index up 0.7% before the budget. There will always be expectations of divestments, etc. On the portfolio momentum score, we have a health checkup report that you can do on our website. There is a momentum score you can get for your portfolio to see how your portfolio is stacked up versus other momentum portfolios, and whether your portfolio is weighted on a concentrated manner. So Adani Enterprise is another stock where the momentum score has virtually collapsed. It is 3 on 100 on Adani Enterprise, and most momentum stocks, momentum strategies would have exited an Adani Enterprise sometime back. The use of momentum score is to stay with winning stocks and to get out of losing stocks, and that's what we do at Weekend Investing in terms of our stocks. You can see here since December 2022, while large caps ran up 34%, Adani Enterprise ran down 38%, and somewhere in Feb 2023, you were able to get out of this and never sort of get into this stock. That's the sort of beauty of staying with the winning stocks. So stockbroking firms, are they going to feel the heat is the topic of discussion for the day. This topic of discussion has started by Nitin Kamath, CEO of Zerodha, who highlighted that the fall in F&O activity in the markets after SEBI's crackdown is hitting volumes. And he says, he opines that the best times of the industry may be behind us. I mean, it's very candid of Nitin to come out and say this. It's not very easy for business owners and leaders to admit that their future may not be as good as what they've seen in the past, in the past few years. But because he's a bootstrapped entrepreneur and he has no shareholders to answer to, he's able to do this candid talk. So what is he saying? He says that 2024 was probably the best year, and for the foreseeable future. And in terms of options turnover, he says we are back to 22-23 levels. So this entire buildup that we had from 2021 to 2024 is seeing an impact in terms of correction in options turnover, and the lot sizes are going to be increased, which will impact the volumes even more going forward, and we'll take a look at that. That starts January 2025. So what are these new F&O regulations which are going to impact reduction in trading activity? So one is, of course, the weekly expiry restriction. So now the exchanges are restricted to one contract per exchange and one benchmark index. So for NSE, they can have options in Nifty 50, and BSE is having options in Sensex. This has reduced trading opportunities and speculative activity in other indices. If you remember, a couple of months back, you had almost an expiry happening every day. That has stopped. Uh, then you have uniform monthly expiries. So all monthly options contract expire on the same day, so that there is no arbitrage, regulatory arbitrage. And that has reduced volumes because there was a lot of players doing this arbitrage between the two. Then additional margins have been imposed, 2% on contract size on short options contract. This increases the cost of trading and reduces the margins for option sellers, etc. And the lot sizes are getting increased. So index options lot size will increase by 2 to 3 times. That starts, I think, January 2025, this month, and end of this month. And higher lot sizes will increase capital requirements. So very small players will get booted out, and retail may, find it difficult. Then there was calendar spread margin benefits that were there, which have been removed. So there is no margin benefit on expiry days. So it makes those spread trading less attractive, and hence volumes will fall. There is stricter open interest monitoring. So at client level, 5%, broker level, 15%. Limits are to be monitored intraday, and there will be penalties on violations. So this again reduces the ability to, maybe game the market during intraday markets, which was happening earlier. And there's full premium payment upfront. Of course, option buyers usually on discount brokers, etc., pay the full premium, but there are a lot of other non-discount brokers who allowed a lot of leverage in terms of buying of options on premium. That will get uh, hit to some extent, and that will limit speculative activities and leverage-based participation. So everything put together is basically a message from the regulator that 99% of you are anyways not making money. So maybe back off one step by making this difficult for most people a small segment of folks who get lured into this basis, a lot of the FOMO that is created on social media, etc., will certainly go out of the market because they will not be able to afford trading now. Now, the genuine traders who are trading, whose number one, cost will go up, some profit margins may reduce for them. I think they will be the ones who will get hit, and it may feel a bit unfair to them that one is liquidity may reduce in certain contracts also, which will also increase the impact cost, and so on and so forth. So overall, while it is for the benefit of those who should not be in this market, those with genuine intent and who are good traders will get hit. So that is a sort of a give and take that has happened. I would have rather, thought that the regulator could have had very stiff entry barriers. So you cannot trade in options if you have, let's say, an income tax return of less than X amount. I think that would have been a more uh, I would say, a efficient way of keeping out those who should not be here, instead of adding more penalties on margins and reducing the liquidity, and all those things. So that basically my view, rightly or wrongly. This is the sort of the index options turnover chart. So you can see the index options premium has gone from 15 lakh crores to somewhere near 1 lakh crores, or sorry, 10 lakh crores. So about 30% uh, premium has gone, and we are now reduced to where we were in 2022, and it may come down further, maybe to this level, somewhere about half of where we are. In terms of NSE stock options, this was index option, this is stock option. So this also has come down by about 20 to 25%. Um, the Nifty index futures turnover has not gone up since COVID. So you can see it is right here where it was even in 2019, and it has certainly dropped from the recent peaks. And the total FNO turnover, of course, has come down. So I think this range that was there, 3 to 4 million crores, is where you will basically end up in next year probably. So I think a lot of the fluff and the huge turnovers that have been happening is a uh, probably that story is over. Now, equity segment is down as well. So equity segment, the cash market, the intraday cash market, that is also cooling off. So it has reverted to December 2023, January 2024 levels, although it is still significantly higher than pre-COVID levels. So this frenzy of new players coming in, and everybody wanting to be a great trader here, I think that story is taking a hit, and potentially more sober days maybe ahead of us. uh, Average daily turnover in cash market, you can see, which used to be 40,000 crores, uh, has gone up to almost 1 lakh 50,000 crores, and is now down to 1 lakh 10,000 crores. So still about 4x 3x of where we were pre-COVID. So cash market is still quite good, I would say, and number of trades also is coming down. So that also probably is something that can come off going forward. So how will stockbroking firms get impacted? So account opening is sort of getting hit. So accounts open, while there's very small data, but in the last 3 4 months, there is a very sharp fall in the accounts open data, from nearly 30,000 accounts to maybe 20,000 accounts, about 30% drop here as well. And you can see here, while it has happened in the past also, index may continue to go up, but this may have sort of matured and peaked out for now. The broking firm's performance, let's say last 3 months performance, you can see here, Geojit is down 29%, 5 paisa is down, IFL Lift is down, SMC is down, so on and so forth. So many broking companies are down. Some smaller companies are up, but I would pay more attention to the larger ones. So maybe like 5 Paisa, IFL, Geojit, ICICI Securities, and so on, so forth. Angel One is up. But if I see the last 1 year returns, then only couple of managers, Wealth First, Motilal Oswal, and these guys are up. others have been down. So it's sort of a mixed bag, and a lot of the returns are also probably not just because of broking, but also because of wealth management and other uh, uh, you know facilities and services that these provide. So this 5 paisa, of course, is where it was at the COVID peak. So virtually 4 years, and virtually nothing to show on this one now. Geojit is up, but again, from 2018 peak, it is barely up from that point of view. And Angel One is at 2800. It had reached 4000. So it is sort of somewhere where it was in 2023. But Angel One probably is also a story of some a tech based upgradation of the entire system, and they have captured some market share. BSC is the sort of the chart which is uh, pretty much unexplainable, in the sense that BSC was less than 200 rupees pre-COVID, and now we're sitting at 5,300. I think what they say is it has a price earnings of 90 times, I think, something like that. They also say that BSC is not going to get impacted because of all these um, changes, because there's not much of F&O volume on BSC anyways. An NSC IPO is in the pipeline. So there are a lot of stories that are going on for BSC. So this is one chart which I think should have been the barometer of if the market is falling off, then BSC should be falling off. But BSC is giving a very optimistic outlook of where the market is and how the turnover fall is not impacting at least the BSC. So this is a question that I leave for you. Why do you think BSC stock is not falling? Is it just because of the impending NSC IPO? And even if it is at 90 times earnings, is that sort of justified? But we are riding it since a long time, so not complaining on that. But do you think that broking companies have topped out? Let me know your thoughts in the comments. Thank you so much for watching, and do like and share this video, and do subscribe to the channel if you haven't. Do share it with your friends and family, and do let us know if you have a reason why you don't subscribe or you haven't subscribed to our channel. Thanks. Bye.